Hi, everyone. We're here for another installment of your Las Vegas Home Specialist Zoom calls, where we have some guests on and talk about some of the issues affecting real estate today. So we have a very special guest today, and Lisa, why don't you take it away and introduce him?
Okay, hi everyone. I'm our special guest today is Brandon Ellefson, like it says down there in the corner, and he is a lender with Fairway Mortgage. And Brandon and I met last week, and he told me about a new program that kind of surprised me because it seems like it's offers some great new opportunities for people who maybe are looking to buy more expensive house that would require a jumbo loan. So Brandon, take it away.
All right, thank you so much, Lisa, and thanks for having me on, both of you today. Really appreciate getting to talk with you some more and kind of share some info on this program. So just to kind of give you a background of what a jumbo loan is and, kind of what it usually is, and then what we have that's different about it. Jumbo loans are loans that exceed the maximum conventional loan limit, which right now in Clark County is $548,250. So if you ever need a loan that is over that amount, you would need a jumbo loan. And typically how jumbo loans have worked for us in the past is they are totally what's called manually underwritten, where we are basically given guidelines, and us loan officers have to know every single guideline and make sure every single box is checked. And it's always been very restrictive with jumbo loans. And they're also have usually required stricter underwriting requirements just because they are larger loan amounts and can be a little bit more risky. So in the past, and especially we had a lot of issues too during COVID, a lot of programs went away and they became even more strict, where, a lot of times they were requiring 20 to 25% down, very high credit scores, lots of reserves, so lots of assets left over after the purchase. And it made jumbo loans really difficult, not only for clients, but us as loan officers as well, just because we had to push really hard against underwriting to try to get these loans through, just because, they were becoming so restrictive. And eventually what my company, Fairway Independent Mortgage, ended up doing was creating our own jumbo loan program that's a lot less restrictive and gives our buyers and us a lot more flexibility to be able to get these loans done. So essentially our jumbo loan program, it's called the Jumbo Edge program with Fairway, is the big highlights to it are that it's only a 10% down requirement. So no more 20% down. And in addition to that, you can not only just put 10% down, but there's no mortgage insurance required as well. So typically with even with conventional loans, if you're putting less than 20% down, you're going to have mortgage insurance, which increases your payment every month. Mm-hmm. With our program, so again, it's if you have a loan amount over $548,000, with this jumbo loan program, you can put 10% down and have no extra mortgage insurance. So will help keep your payment down some. And the other really cool caveats to it is that it totally follows the conventional loan guidelines. So it follows Fannie Mae loan guidelines. So we are a lot less restricted, which is great. And we can also run the loan through an automated underwriting system where it gives us an answer right away, whether or not you'll be approved for the loan. And that's what the underwriter is going to follow as well, is what shows up in this automated underwriting system. Instead of making sure we've got, every single box checked, we can just go through this program and make sure that it runs and it gives us the approval. And basically the loan program, it allows for a maximum loan amount of $3.5 million. You can purchase a primary home, a secondary home, or even an investment property with it.
Wow.
We can do purchases, rate insurance refinances, and cash out refinances as well.
That's really, that's amazing, especially about the investment property. Yeah. So to go through automated underwriting, what exactly do you need from the borrower to do that?
So good question. So we like to try to get as many documents as we can up front to make sure that, we're good to go. So basically, when I get a loan application and run it through our system, before I run it through that automated underwriting system, I like to make sure I get, all of your documents out of the way beforehand to make sure that it's going to be the same, with me up front as to when you're under contract and an underwriter's looking at it. So typically, that's going to require, for W-2 earners, we're going to want, pay stubs, W-2s.
Mhm.
We're going to want bank statements, any retirement account, brokerage account, any assets basically that you have. The more that we can show, the better. Again, because a big thing, not with pretty much any loan program, but especially with this one too, is reserves always help. So reserves, again, are money you have left over after your down payment and closing costs. So they want to see, do you have 3 months, 6 months, 12 months of reserves, basically 12 months being that many months of payments left over.
Wow.
So yeah, we're looking for those sorts of things. If you're self-employed, we're going to look at tax returns. We're going to look at a profit and loss statement, bank statements again as well, business bank account statements. And again, it really varies, depending on what your situation is. And if this is going to be an investment property, second home, we're going to need information on other homes that you own. So it can really vary client to client, but we like to, make sure we have all of your documents up front.
So about how
credit
much
score.
money?
Oh, I'm sorry, Lisa. I was just going to ask if there was credit score, if it was based on a credit score.
Yeah, good question. So the minimum credit score required is a 660 credit score for this program, which is pretty reasonable.
Yeah.
With that, you're going to need to keep your debt to income ratio a lot lower. And I believe you're going to need to put more than 10% down. I believe with this program, to be able to put 10% down, you do need a minimum 700 credit score. So to take advantage of, only putting 10% down, you do need to have a 700 credit score. But, if you have a lower credit score, let's say 660, you're going to be looking at putting 20% down.
That's,
Cool.
I mean, that seems reasonable. I actually had 2 questions, so I'm just going to ask them so you can answer them both. One is
Fairway.
about how much money do you think people would save without having to pay the PMI under the 10%? And 2, what's the interest rate running for that program?
Yeah, so the PMI, I mean, it could, because you're looking at the private mortgage insurance, it's basically kind of almost like another interest rate. I look at it in a sense because they take a percentage of the loan amount and divide by 12, and that's your monthly PMI payment. So again, that's dependent on credit, and they, analyze everything. But with these large of loan amounts, I mean, when you're looking at $1 million loan amount, I mean, you're probably looking at least $250 to $500 a month.
I would guess, because
PMI,
even
that's-
at a lower loan rate, with that, if it's a higher interest rate, you're spending a couple $100s a month.
Yeah,
PMI.
most definitely.
Yeah.
So it could really be some serious savings on that end. And then interest rates are really competitive with this program as well. I was just looking today, I mean, kind of in a perfect scenario, you'd be looking, with excellent credit, putting a lot down, you'd be looking at about 3.125%. If you're just doing the bare minimum of 10% down, 700 credit score, then you're looking at around 3.75%.
Yeah, that's still, that's not outrageous at all for, the program that you're talking about. That's good.
Yeah, for a larger loan amount, there's additional layer of risk with the jumbo loan just because it is a larger loan amount. And then again, no mortgage insurance as well. So that kind of factors into a little bit higher interest rate.
Right.
I know from reading, there's been a lot more higher priced homes, luxury priced homes that have been selling this year. Has that worked out with this program for you guys?
Oh yeah, absolutely. We've been utilizing this program. It came out a few months ago, and pretty much every time we have a jumbo loan now, we're turning to this program. We have a lot available to us, but we've priced it out. So we're always looking at, the different interest rates of the different jumbo loan programs. And that's kind of where I look first to see, hey, what's going to work best for this client, because I always want to give them the best deal. But we're always so competitively priced with this program that 9 times out of 10, it's the lowest one. And then it's got the easiest underwriting requirements where it just makes the most sense to try it.
Great. Well, thanks for sharing that with us, Brandon. I learned quite a bit actually about that. So And anyone who wants to try to get a hold of us or Brandon, do contact us directly, and we will help you get some more information on this new type of jumbo loan. Anyway, until next time, thanks for joining us today.
Thanks so much.
Yep.